the list of losers. You only have a handful of losers in trade today. Among those is HDFC, BPCL and Sun Pharma as well. Quick look at what are the sectors doing, and at this juncture you have only pharma index that is trading lower in trade. It is down about 0.2% as we speak, and PSU Bank Index continues to rule even in today's trading session, trading higher by about 2.5%. But must say that today is going to be a power-packed show, because if you are trying to make a list of all the top stocks that you should have in your portfolio, then I believe that you should start doing it now, because we will have our experts share their Diwali Dhamaka picks, as well as we have a very special Diwali special show lined up for you at 11:30, and that is 3 aces, where we'll have 3 market gurus actually give out 3 picks each that you should keep on your radar for the next Samvat. So let's quickly dive into it, Adiraj, and let's bring on board our guest for today.
Right. Exactly as Cheryl has explained, the festive mood in ET now has been going on since Monday, and it's going to go on till Samvat takes place. It's a Dhamaka Diwali with ET now. And as on today's show, of course, we are calling in our guests first. A very good morning, Kunal. Coming to you now, what are the picks you would suggest to our viewers this Diwali?
Good morning, Adiraj, Cheryl and everyone. I would suggest a couple of buy calls, and my focus is 2 important sectors over the last couple of days. One is, of course, financials, and the other is auto. Now, from the financials, I would pick up a PSU banking name, something which I think has been off radar for many investors, but the rally into these stocks have been quite strong. Indian Bank is the first stock which I would suggest as a buy. I think it's a very strong chart, a phenomenal comeback for Indian Bank right from the time the stock was 2 digits a couple of years back to now almost at 200 plus for the stock price. So I'm expecting another 20% up move over the medium to long term. So that's a 9-month plus kind of a time horizon for Indian Bank. 250 as a target, stop us at 185. The second would be one of my favorites from the auto pack, and that's M&M. I've been very repetitive for the stock over the last 4 to 5 months. I would still maintain that bullish stance on M&M, and expecting that this stock would continue to march and be the leader from the entire auto pack. So buy with a target of 1440, stop loss at 1140.
Alright, so those are the cracker stock ideas for Diwali that are coming in from Kunal. This morning is Indian Bank buy with a target of around 250, and a buy on Mahindra with a target of around 1,440 rupees per share. And Kunal has been kind enough to actually acknowledge the fact that he has been pretty bullish on Mahindra for a while. But good morning to you as well, Rajesh. And what are your top picks that you have for our viewers today?
Good morning, Sharon. Good morning, Adiraj. As far as Diwali is concerned, we have 2 picks for our viewers today. One is Bajaj Finserv Limited with a target of 2100. This is a holding company of various financial services under Bajaj Group. They have 53% stake in Bajaj Finance and 74% stake in both the insurance ventures, life and non-life. Again, they have 100% holding in Bajaj Housing Finance and Bajaj Financial Securities. They have got a AMC license recently, which they might go for a mutual fund launch in some time near future. It's a debt-free company. AUM growth is very strong. Asset quality is stable. And we believe that despite the fact that the stock has given phenomenal return in the last 2 years or so, we still believe there is a lot of way to go, and we have a target of 2100 from this Diwali to next Diwali. And the other one would be GNFC with a target of 900 rupees. It's one of the largest player in fertilizers, plus a major player in chemicals. It's one of the leading manufacturer of TDI and has got a capacity of 67,000 metric ton per annum. And with TDI, I would like to add that world over TDI production has stopped major countries. The BASF, which was one of the largest producer, has stopped production TDI because of their regulatory environments, and hence this company is going to be benefited. Even acetic prices are on a high. It's a debt-free company. 500 crore expansion is going on, and another 1200 to 1500 crore expansion will go in near future. It's highly undervalued to peers, despite all these fundamentals trading at a PE of less than 5. I think this stock can give you good returns. For a 1-year time horizon from this Diwali to the next Diwali, we have a target of 900 odd rupees.
Right. On that note, stay with us, Kunal and Rajesh. We're going to slip into a very short break, but as we come back, we get you the query segment, the rapid fire segment, and much more.
Hello and welcome you.
All leaders in individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case.
What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is
Buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and as mentioned at the start of the show, it's a very exciting show for you all because if you want to make an apt portfolio for your next Samvat, we've got that covered for you on the show. Yes, we will be taking your stock queries, but along with that, we'll have 3 market guests share their 3 picks each for the new Samvat, and that show will be at 11:30 a.m. But before that, Rajesh, what a day it has been for the market. What a great 2 days it's been for the markets. We are actually sailing in the positive territory, but we've seen volatile market conditions and it does make investors jittery. And in such volatile conditions, what sort of advice do you have for retail investors when it comes to protect their wealth?
See, Cheryl, there are a lot of things that can be discussed, and but with the paucity of time, what I would like to say is in this kind of scenario, retail investor at least should avoid short-term trades because you never know tomorrow morning what will happen. The market will open in an uptake or a downtake. So it's better to take a long-term view, do your own research, ignore all the noise on WhatsApp groups, invest in good companies with good, strong fundamentals, and always have a long-term view, I would say. At least a time horizon of 9 months, 12 months. In this kind of volatile scenario, it's better not to trade or trade with strict stop losses only. That would be my advice for investors as such at this point of time.
That's a sound investment, sound advice coming in for Rajesh for all of those investors, and also stay wary of their WhatsApp forward messages that you get. WhatsApp forward message only in good morning form is great, is what I believe. But let's move on and let's bring on board your stock queries. You know what you got to do. We are live on YouTube, Facebook, as well as on Twitter. So do mention your name, the stock that you want recommendation on, and your time horizon. And also you can write into us on that WhatsApp number. Just a caveat for all of our viewers who are tuning in, I take all the YouTube and Twitter queries, and Adaraj does take the WhatsApp queries. So I'm not kind of ignoring your messages on purpose on WhatsApp. But let me get on board our first viewer query. This one is coming from Surana ji, and he's bought Axis Bank 50 shares at a price of 710 rupees per share. Kunal, should he hold or book profits on this one?
No, I think you can continue to hold on. I'm bullish on the banking index. Axis Bank has been a recent mover. I think the last 1 month it's been an outperformer as compared to the other peers like IndusInd, ICICI, even the large cap names like Kotak Bank, HDFC Bank, etc. And the stock has moved up quite well from 720 levels. I think mid of September, the stock has now jumped up to almost 800 plus. So the chart looks attractive. Since you bought at much lower levels, you also have a lot of buffer at play. I would suggest to hold on.
Right. This one's for you again, Kunal. Ghosh Dada has written to us from Delhi. He's asking whether he can buy Godrej Consumers or Godrej Industries today.
So I think Godrej Consumers is a much better play. Godrej Consumers, I think apparently moves in tandem with the entire FMCG index as well. We've seen the stock getting back into the thick of momentum. I think the March-April lows for the FMCG stock was around 650, and from 650 it's now at 850 odd levels. For itself. So it's recovered quite well. It's a long distance away from breaking the 2021-22 highs for Godrej Consumers. So I believe that could be a potential upside for the stock. So even if you're looking to buy at current levels, I think 1100 to 1000 could be a moderate target for the next 1 to 2 years.
All right, this next query that I have is a long-term query. This one's coming from Raju Gopalan, and he wants to know if it's a good time to buy Reddington India, Rajesh, for the longer term. And his long term, he's saying 2 to 3 years. Do you think it's a good bet to look at Reddington India, given the fact that this company is also a retailer for iPhones in India?
Yes, you said it right, Cheryl. It's a retailer for iPhone and many other IT products in India. Both the divisions are doing well, but for a longer term horizon, I don't think this would be a apt stock because it has already run up quite a lot. And it's more of a trading or a short-term bet kind of stock. For a longer term horizon, you have better bets like the 2 Diwali picks we discussed now, or even one can go for a Larsen or a Reliance. Even in mid-cap, one can have a look at IRCTC. So these are the kind of stock which one can hold for a longer period and not Reddington.
Right, Rajit, this one's for you as well. It's going to be a long one. Amal is writing from Tuticorin in Tamil Nadu. He's holding IOCL shares, 1,531 shares at 72. Gale, 420 at 420 shares at 92. Now he's asking if the government announced subsidies of 22,000 crore. How will it impact the stock price? And he's planning to hold both of these for a long term.
See, for longer term horizon, both are good stocks. They give good dividend yield. They're trading at a much below their intrinsic value. And in the longer term, they can give good returns from the current market price. But as far as the 22,000 subsidies announced, I don't think that it will make much of an impact. But the losses, because of the losses, which they are, all the three are going to report are much higher than what has been announced. Yes, it would help somewhat, but it won't mitigate the entire loss part. So for a short term, I don't think anything would happen in these kind of stock. But for longer term horizon, yes, IOC, BPCL, GAIL are good bets.
All right, this next one is coming from Shrikant, and he wants to know about Federal Bank, a target price in particular, Kunal.
So I'm not sure what's your buy price and what's the time frame you're looking out for, but I'm assuming that it's to do with very short term, and I would probably believe that you would have bought already maybe a few percentage points lower at least. I think in that aspect, then 135 to 140 could be a modest target range which you can be looking out for Federal Bank. And remember that Federal Bank is a very low beta to moderate beta kind of a stock. In fact, not even moderate. I think lesser than that as well. So it for the stock to move up 10% higher, at times it takes a process of at least 2 to 3 months, and then the stock manages to saturate at a higher zone for itself, spends time, consolidates over there, and then tends to continue its momentum. So it's that kind of a stock where you can't expect fireworks to happen every day. So in that respect, you should probably be looking out for a modest target. 140 odd could be a decent target from a short-term play.
Right, Kunal, this one's for you. Kanan from Chennai, Mahindra Finance, he's holding 110 at 258. Should he hold or sell or book losses or buy some other growth stocks in finance for 3 to 5 years?
See, I think M&M Finance itself is not a bad stock. I believe, if I'm not wrong, the stock has just crossed the 200 mark. 210 to 14 is where the stock is trading right now. I think it's a decent chart for M&M Finance. The stock has been doing reasonably well. From the 2020 lows, from the the recent lows, I think month of June itself, the stock has shown a very good progress and recovery. Now, this is a good time to try and look out for more and buying more of these housing finance or the auto finance names for itself. So I would suggest that you should be looking to hold on to the stock. And if you're looking to add more names, I would believe Chola Finance, L&T Finance and Bajaj Finance, these are also very interesting bets from current levels.
All right, Manish Raju wants to know whether he should buy Canara Bank or West Coast paper at current market price for the next 6 months, Kunal. And which of these look good and recommend levels to buy?
See, I'm bullish on both of these names. In fact, West Coast Paper is something which I recommended 3 or 4 days back at 520 odd levels. The stock is already at 570. So the first 10% of up move is behind us for West Coast Paper, but I believe that possibly a few more percentage points from current levels could be seen. So if you have a 6-month time horizon, possibly another 600, 620 could be a target range for West Coast Paper, but that's where you would probably have to look out to book profits. Canara Bank also looks attractive, but then you ideally should not buy the stock when it's going into a big uptrend, because the stock has this odd tendency of getting into 3 days or 4 days of sharp price uptrend and then going into sharper periods of correction as well. So it's a good stock. You have to probably look out for Canara Bank as a part of your PSU banking portfolio, but may not be the best price to buy full quantity. You can start at current levels and then average on dips.
Right, thank you, Kunal. Rajesh, this one's for you. Mayank is writing from Gurugram. He wants you to suggest something for Hathaway Cables, and he's also asking, should he hold it for long term or sell?
It's a sell from our side. The numbers are not that good. It's not happening anything despite the fact that it's been taken over by a larger group. It's no point sticking to this counter, rather switch to some other names which we have just discussed in our show. We have a sell call in this.
Okay, this one is coming from Hari. He's writing to Abu Dhabi. And Rajesh, this one is for you. He's holding 200 shares of Havells for the last 5 years, and the buy price was 665 rupees per share. As well, he has Polycab, which he just bought, I think, over 6 months ago, 100 shares at a price of 2,430. Now, he wants to know which of these two is a good bet that he should continue to hold on for the longer term.
See, both are good stocks, no doubt. And coincidentally, both are in the same industry, I would say, producing same kind of products. But at this point of time, I would say Havells being more of a trading kind of stock where a lot of volatility is seen. Polycab is a long-term investment kind of stock. And when you have a long-term call, you go for Polycab. Because it's doing well, the numbers have been good. It has recently moved into FMEG, that is fast-moving electronic goods. And that division is doing very well. With the uptick in the affordable housing segment and the real estate segment, we think these kind of companies are going to do well. Go for Polycab.
All right, so that's the view coming in on Polycab. And with that, we actually come to the end of the query segment. But viewers, please don't be disheartened. So what if you're not taking your queries? We are going to give you a good investment ideas, and that is coming up right after this break. You will have 3 market veterans give you 3 picks each. So a total of 9 picks is what you will be getting, with their fundamental take on that as well. So stay tuned for that special telecast with Vinny, Pankaj and myself on the other side in 3 aces. But for now, we wind down on this edition of Buy Now Sell Now. Goodbye from Adaraj and myself.
Markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
We are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets in Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I don't want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here ET Now have been getting you bit by bit. Welcome to ET Now's festive special programming. I'm Cheryl D'Souza, and with me I have the dynamic duo Pankaj Podar as well as Vinny Motiwala. A happy Diwali to both of you all, and this time the fervor, the vibe is very different compared to the last 2 years, isn't it, Pankaj?
Absolutely. Just as you said, this time seems different. Last 2-3 years, it's been up and down, but this time it's a full-fledged celebration, and there's no doubt about it. People are coming out and celebrating their festival.
Absolutely. And as we enter this Naya Saal, we are here to bring you and make sure you are set to have a Nai Shuruaat coming in as well with the right set of portfolios for you and all the stocks that should fit into your portfolio.
Right, and to do that, just that, we have our three aces joining on the show to reflect on the Samvat gone by and how should you prepare for Samvat 2079 and brighten your portfolio with your rocket picks.
So let's, not wait and go to our guest on the show. Our three aces today are Pankaj Murarka, Sandeep Sabharwal, and Neeraj Diwan as well joining us. So let me start with you, Sandeep, first. Last time around Diwali, we were around 18,000. We've come down now to 17,200, 300 odd levels. But if you look at the world, we've done substantially well over the last 1 year. What would be your outlook as far as markets go? Key things to watch till next Diwali?
Yeah, first of all, best wishes to all the viewers and all of you for Diwali. So last 1 year has been surprising as well as on the positive side, I would say, because of the way, like you said, the world has behaved. Now next 1 year, like the previous 1 year, is tougher to predict because of how well we have done. So I would think that we will have a phase of extended volatility for a few more months. We will see the markets form some sort of bottom globally in the next 4 to 6 months. And from there, I think we could have a better run. So where we will be same time next Diwali is very tough to say, because I stopped predicting the index a long time back.
That's right. Stop predicting the index. But Pankaj, coming to you, firstly, happy Diwali to you as well. And you know, somewhat 2078 actually saw the leadership coming in and emerging from the FMCG and the auto space. Primarily, you could say that consumption side was driving the growth. But, you know, can we look forward and closely, you know, say that, you know, now going forward also these two sectors will continue to do well, or what are you looking at?
Yeah, Vinny, Cheryl and Pankaj, wish you all a very happy Diwali and to all your viewers. I think last year has been a great year from Indian equities perspective, because the world around us has been significantly challenged and India is still held well. And I think what is more important is, while we've been talking about India's inherent strength, last year has been a year where the world has taken notice of that. Just think about it, India's weight in MSCI emerging markets, which was about 7% 3 years back, is now at 15%. And is the second largest weight now after China, which effectively means that as and when globally things stabilize, India will see disproportionate allocation of capital. I think this is what we've seen, last year as well, and I think we'll see a very high level or a significant amount of capital that will flow into India. I think while the world around us is challenged, I think the good thing about India is we have enough growth drivers internally. So as you rightly mentioned about consumers, autos, and more importantly, I think after a very long time, we are seeing some initial signs of revival in India's investment cycle. So I think engineering and capital goods sector has done pretty well over the last 12 months. And I still think that's very early days for the sector. So I think the leadership will come from domestic economy and domestic economy oriented sectors, while global sectors could remain challenged for some more time to come.
All right, so that's a view coming in on markets from Pankaj. But Neeraj, coming to you, one of the dark horses in this somewhat would be the defense play. And this sort of rally that we've seen in the defense names is not even a blink and miss rally. It's just managed to sustain through the course of the year. But the key question is, will this theme hold out in somewhat 2079 as well?
Yeah, good afternoon. Yeah, happy Diwali to you, Pankaj, and all the viewers. You know, I feel that the kind of rally that we've seen in defense stocks, it's not really, I don't think we can say it's the beginning, but I think we are somewhere in the middle of the rally, because I feel still there are opportunities there. If you go across, if you go stocks there, stock specific, there are still opportunities. Valuations are still not so expensive. So I think the theme should still continue and should play to the positive. You know, there are stocks there which are still available at decent valuation. There are companies where the government wants to disinvest, so some privatization will happen there. So I think there are still opportunities there.
Right, so that's the view that we've got from our market experts on the somewhat gone by and what to expect ahead in somewhat 2079. But which are the stocks that would provide safe haven in this volatile environment? So Pankaj, let me come first to you and let's get your first recommendation, and it's from the telecom space. So do you think with the arrival of 5G technology that we've entered into, do you think it's a game changer? And which is that telecom space, that stock that you're betting on?
So we like sector as a whole, because it's a sector, if you just think about it, 5 years back, it was a sector which was fragmented with 10 players, and from there we've gone to a 3-player market, so it's become sort of an oligopoly with 2 dominant players. And the good thing is that 2 dominant players control 120% of the profit pool of the sector, because the rest of the other players make losses. So we think what we've essentially seen over the last 2 years is a return of strong pricing power in the sector, because these companies have been taking calibrated price hikes. So I think it's a given that our telecom bills will keep increasing for all of us. And in that context, you know, to compensate that, it's better to invest into a telecom company. And we really love Bharti because it's completely focused on telecom play. And we think, yes, the 5G transition will certainly help them, because when you upgrade customers, give them high speed, they will end up using more data and probably end up paying more for telecom services. And if you're talking about digitization, then all of that digitization in India is riding on back of the bandwidth which is provided by these telecom companies. So we are of the opinion that telecom is a secular growth story in India with very strong pricing power over the next 10 years. Very rarely you come across utilities with strong pricing power and strong ROEs. And I think that's a unique combination you find in Bharti.
Just had a follow-up question on this telecom sector, that every time you think they're going to generate cash flows, some of the other investments come up, and that's been something which is disappointing. So last 3 years have been about repairing balance sheet, trying to make that price hike, take that things ahead. But now with 5G investments, you think that cash flow thing will come, which markets are waiting for?
Absolutely, Pankaj. I think now these companies are sitting at peak debt and peak capex. So incrementally over the next 3 years, just to give an example, Bharti is going to generate about 1.4 lakh crores of cash flows. So effectively, we'll see Bharti returning back significant amount of these cash back to shareholders after a gap of almost 15 years. So that's a big change that's going to happen in the sector overall, which we have not seen.
Okay, let's shift gears then. And talking about gears, let's talk about the auto space. Sandeep, your first pick is coming in as a Bharat Forge. Now, with the defense theme picking up, the EV theme picking up as well, how are you looking at Bharat Forge? What is your outlook coming in for this company?
So Bharat Forge, in my view, is transforming into a company which is not going to be a pure auto company, but it will be auto plus a lot of other things. And for it, what's working now is that its core auto business is picking up. Domestic operations are doing well. The high input price pressure of the last 2 years is going away. And their foray into other spaces like aerospace, defense is now starting to give them some traction. So I think next 2-3 years we'll see sectors X of auto also become big for them, and margins will improve. And this company is always like last 2-3 quarters, people have been expecting that things will not be as good. They have been surprising on the positive. And the management also is a very focused management. So I like it and the valuations are reasonable in the context of the overall market, where the stock trades are around 18-20 times next year. So I think it has reasonable return potential.
Right, let's go across to Neeraj as well with his first pick. Neeraj, Wheels India Auto Ancillary Company, primary focus on domestic markets. Can you talk to us about this idea for the next 1 year, and what are the things that you expect to change in this company which can lead to re-rating?
Yeah, absolutely. Wheels India is part of the TVS group. So as we know, TVS group has been doing so well, and there's a conservative group. And Wheels India, has been into the steel rim manufacturing business. They're among the largest automotive steel rim manufacturers, and they have a global presence too. So as far as domestic is concerned, they are present in light and commercial and medium commercial vehicles, passenger vehicles, and globally they are also present in the off-road vehicle, tractors. So as far as the domestic is concerned, they have 73% of the sales coming from domestic, and about 17% coming for global sales. I think going ahead, what was plaguing this company in the last few quarters, why you're getting it at a decent valuation, is because the logistic costs, the raw material costs had all gone up. And now we've seen some stabilizations there. And the company over the long term, if you see the previous years also, it's been a consistent dividend paying company. It's a cash rich company, there's no debt in the books. So it will continue doing well, and I feel that with total opening up happening, and with globally also the kind of demand that is coming from tractors and off-road vehicles, so the global footprint should also continue and should keep on doing well. And looking at the track record of dividend and profitability, I think the valuation at which it is trading right now is pretty attractive. And once the negatives which were there over the last few quarters are improving going ahead, I think the stock will come back and show the kind of valuation it used to trade earlier. So I think there's a decent potential with this company, and it's a good long-term investment bet for investors.
Okay, let's shift gears and actually talk about the retail space. Pankaj, Aditya Birla Fashions, this was there last year in the Samvat list as well. Again, making an appearance in your top 3 stocks for this Samvat as well. What is keeping you so bullish on this one?
So that's the beauty of good companies and great companies. You could just buy them once and you just keep them holding for a period of time. And I think ABFRL is one such company because it's just in the right space probably at the right point of time of evolution of India. The best thing is in any country in the world, the leading consumer apparel retailer is amongst the top 50 companies in that particular country. You take example of Zara or LVMH and all the other apparel retailers. Now in India, we have this unique situation where ABFRL is the largest branded apparel retailer player, and yet it's a mid-cap. And this cannot happen. So if India is to grow, then I'm sure consumers will spend more and more on apparels. And there is a big shift that is happening from unbranded to branded because people want to wear branded apparels. And if that be the context, then I think this is a company which can continue to grow at a high rate on a sustainable basis over the next 10 years. So I think it's one of those classic stocks which you just buy it and just forget about it.
So what would be the return then you would be expecting from this one? Last year it was, since last year somewhat to somewhat I'm comparing, it's like 15% as of now return. How much are you expecting it? How high could it fly now?
Well, why should we cap upside by putting a number to it? Yeah. So great companies, they tend to just compound over a period of time, and we've seen that over a period of time the kind of returns they accumulate for investors are unparalleled. Not very often you come across such kind of great opportunities, but I firmly believe this is one such.
Right. One such opportunity is also Praj Industries, as per Sandeep Sabharwal. Again, if we would have put Praj's chart for the last 2 years, it's been doing well. It's on buy list of a lot of names. Still, you believe it can do well. What is the view that you have? And I mean, it's been a company which has been there for ages, changed its evolution. So why next year? Is this the time that all this effort would start to pay off?
Yeah, so you put it in a nutshell in your last comment actually, because they've been gaining orders, they've been maintaining their market share in the entire ethanol business at 65–70%. And plus with this Russia-Ukraine conflict, there is a recognition globally also that there needs to be some sort of fuel security. So from Europe also, a lot of fuel mandates are likely to come both on first and second generation ethanol. Last 2 years they booked orders, but the profits didn't come because steel prices went up sharply, and they are typically a fixed price model contractor. So now with the input prices falling, we'll see a huge expansion in margins. So I think this year profits will grow 60–70%. Next year profits will go 50–60%. I think next year EPS should be 25–28, and to that extent the stock offers reasonable return potential.
Right, so that's the second pick coming in from Sandeep. And you know, Pankaj, I've been wanting to point this out. I've realized that 2 of your picks are the ones where I feel it's all based on consumer spending, and the highlight was that we'll end up paying more. As a consumer, this seems to be a bittersweet moment where you are betting on these stocks doing well given the fact that the consumer spends more, isn't it? So that is the theme. That's exactly what you spoke also,
Absolutely,
right?
Because you just think about it, last 10 years, the highest incremental spend in the world came from Chinese consumers, because Chinese per capita income went from $2,000 to $10,000. I think India is exactly at that space, where we are at about $2,500 of per capita income, and over the next 10 years, India's per capita income will go to $6,500, which effectively means many more Indians will become very wealthy, and they're going to spend huge amount of money. So you just want to invest into businesses which will be beneficiary of that consumer spends.
And we are back with our Diwali special, and that is the Wheel of Fortune that we get our market experts to spin, and they have to answer the question that is posed to them. And are you ready, Sandeep, to spin this Wheel of Fortune?
Sure, let's go.
Quite a spin, and what's your biggest regret then?
No regrets per se, but I think the biggest regret of any equity investor always is that you sold some stock too early.
Right.
So I think that might be the regret in some stocks which went up substantially after that.
Right, that is mostly now you term it as FOMO also, yeah? Fear of missing out also, because if you sell out early, then you missed out on that rally that a particular stock also gives, isn't it?
FOMO is different. FOMO is when something has gone up so much that then you think that you have missed it, now you can't make it.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded.
Exchange partner BSC. Experience the new. Co-powered by Signature Global, making India affordable.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is like, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
After a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. the tiny bits, the nut.
Let's talk about Century Enka then. Neeraj, that's your pick. You have been vocal about Century Enka in the past as well. What, according to you, is actually working well for Century Enka in the entire Birla Group pack?
Yeah, so as you rightly mentioned, it's a Birla Group company, and this has been into the synthetic fiber business in the last so many years, since 1965. So they have a good presence in the nylon tire cord fabric, which is used as reinforcement for bias tires. And the other business, that is the nylon filament yarn, is basically another textile-based business, which is also, they have a good presence there. So they have almost 23% share in the nylon filament yarn business, and they have a 25% market share in the nylon tire cord fabric business. So the management, which has been very conservative and not been investing money in future capacity, and such a conservative management is now looking at investing money into the businesses. So they already have a capex plan going where they're spending about 350 crores in capacity expansion for their businesses. And they're also going into polyester tire cord fabric, which is used for radial tires. So I think the growth which has been coming from capacity utilization will further go up with additional capacity coming in. And the margin will also improve, because when they have different kind of products, value-added products coming into the market, they can use their capacities for different products where the margins are better. So another thing they're doing is that even the nylon 6 waste that they have, they even using waste to improve that, recycling that and getting that back as part as raw material, and even selling them into the global market. So depolarization, polymerization is one which is really helping them, achieve that target. So, and if you see the valuations also, the company is very attractively priced, and the market cap is almost half the sales, last year's sales. So I think it's such decent valuation, and there's a possibility of re-rating because the capacity is coming in. I think it's a good investment from that angle.
Let's go back to Pankaj Murarka now. He has another large cap pick. Again, one can define it's become a consumer company with its India branded sales, and that's Sun Pharma. You're playing it for US generic, you're playing it for the stability of their India FMCG so-called generics business. How are you looking at this company, and why this large cap after it has consistently performed for the last 3 years?
Well, you're playing for everything. So all the businesses are doing well. Essentially, domestic pharma market in India will continue to keep growing at double digits for the next 10-15 years. And being the largest pharma company in India, I think they'll be the biggest beneficiary of that, growing at a rate higher than the industry. More importantly, last 3 to 4 years have been challenged for generic markets in US, where we have seen significant pricing erosion. But I think now we've reached a stage where pricing in generic market is stabilizing in US, and that will help Sun Pharma. But more importantly, the more attractive thing about Sun Pharma is, Pankaj, they have transitioned their business from generic to complex generics in US. Now they get a significant part of the US revenues out of complex generics, and that business will scale very significantly over the next 3 to 5 years and probably cross $1 billion. So they're going to make huge potloads of cash out of their complex generic business, in which they've been investing now for almost 7 to 8 years, and they've invested almost over $1 billion in that business, and all of that has been expensed out of their P&L. Nothing has been capitalized. So now they've reached a stage where it's time to monetize those investments.
We've seen a lot of other Indian pharma companies trying to go there but fail in complex generics. But because of the success that they've had in their 3-4 drugs that they've launched, is that the reason why you believe that it'll add on?
Oh yeah, absolutely. So I think over the next 5 to 7 years, Sun Pharma, the good thing is they've always maintained leadership in whatever they've tried to do. So they went into US generics. Over a period of time, they became the largest generic company from India and US, and amongst the top 5 generic companies globally. They've made this transition to complex generics, which has been a very expensive proposition for them, because it's taken 8 years and they've sunk in over $1 billion. But now we've reached a stage where that business has started breaking even. Now over the next 5 to 7 years, that business will scale up significantly, and we'll see cash flows coming back. And more importantly, those cash flows then will put them into a virtuous cycle where they can use those cash flows to reinvest back into new molecules and new drug discoveries. So I think this is a big movement for Indian pharma, because it essentially means Indian pharma will transition from doing pure generics drugs to complex generics and novel drugs, which are based on significant R&D and brand building, which calls for significant investments. And Indian company doing and reaching critical mass in that business, which is such a high investment business, I think is a very significant thing for Indian pharma companies. So I think as a company, I think it should do very well.
Okay, let's move on and talk about Delta Corp. Sandeep, this is the next pick coming in, and this has, when you look at it, the unlock theme, it has been a beneficiary of that unlock theme coming in. But, there is a lot of policy issues that come in from the government side as well. So why do you see this? Why are you picking this stock up, and how are you seeing this move then?
So I never invested in Delta Corp earlier because I had uncertainties about the management, the business model, etc. But I think now, given what's happened in the overall hospitality industry over the last 2 years, the way the re-rating has happened, this is one stock where re-rating started but stalled because of the GST issue, like you rightly said. Now, my view is that it's a hugely cash-generating company. Like, it can generate 300-400 crores of cash every year. It doesn't need debt to grow. And it's in a business segment where it's the only listed player in this space, in the casinos business. And I believe it's set to grow, GST or otherwise. So the only reason it's available so cheap is because of this GST uncertainty. My analysis suggests that on the casino business, the GST should not have any impact. Online, it could have an impact, and online as a part of its overall valuation is not so much. While other hospitality companies like Indian Hotels, we discussed Diwali 2020, it was 90 rupees, today it's 320, 330, whereas Delta Corp hasn't gone anywhere. Like, it was 330 6 months back when this GST issue started, now it's 210. I find value at 13-14 times next year earnings, and I believe that once these uncertainties go away, whichever way it goes away, the stock will do well.
Gets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
Market right here in ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be